In this chapter, we will discuss the importance of building corporate credit. When running a business, it is important to be prepared for anything. No matter how much preparation you make, there is always an element of the unknown. You never know how successful your business will be or how big it will become. When an opportunity presents itself, it's important to be prepared to take advantage of it. When setbacks occur, it's important to be able to take the necessary steps to get around them. In an earlier chapter, we discussed 3 prominent obstacles that all business owners face. The most devastating obstacle of all, however, is a lack of working capital. Roughly 90% of all businesses fail within the first year for this reason. When an unforeseen circumstance affects the business, most business owners simply are not prepared. For this reason, it is highly advisable to build a corporate credit profile. Once a business owner has established an LLC or a corporation, they can begin building a separate credit profile for their business. This credit profile is attached to the business's EIN rather than the business owner's credit. Once this profile has been established, the business owner may then invest into their business using the business's lines of credit while leaving the business owner's credit unaffected. This means that the business is always prepared for unforeseen circumstances, and the business owner is completely protected in the event that the business goes into insolvency. Using corporate credit instead of your own credit means that you are not putting your valuable personal credit at risk. Your business assumes all the risk instead. This also means that when you are given the chance to invest into a very lucrative business opportunity or need to expand your existing business to make even more money, you won't have to let the chance slip away simply because you don't have liquid assets or available personal credit. In other words, you skyrocket your chances of success without taking on any personal risk. In the end, if you make a bad decision or some extreme situation forces you out of business, you can dissolve your LLC or corporation and the debt dissolves with it. Then you are not left with a lot of crushing debt with nothing to show for it. Putting this into effect is not an easy task. It takes an investment of time and money, but the benefits can make all the difference. Now we need to dispel a few misunderstandings regarding corporate credit. You may notice whenever you set up a new business, you soon after receive numerous offers for business credit cards. Now these offers may be useful, but they are not corporate credit. And just because you have an LLC or corporation does not mean you simply walk into a bank and apply for corporate credit. In either case, you will have to use your Social Security number to apply for credit. Once your Social Security number is given, the debt you take on will end up being secured by your own personal credit. Building corporate credit begins by obtaining a DUNS number. A DUNS number acts as a Social Security number for your LLC or corporation. The DUNS number is issued by Dun & Bradstreet. Dun & Bradstreet, or DNB, is the primary corporate credit reporting agency along with Corporate Experian and Corporate Equifax. Before DNB will issue you a DUNS number, they require that your LLC or corporation pass several hundred compliance checks. These checks include verification of the company address, the veracity of the information supplied, and whether the phone number is listed in 411. Once the company passes the compliance checks, DNB issues you a DUNS number. This DUNS number is used every time you apply for credit, and it generates a new credit score for your business called a Paydex score. This Paydex score is just like a personal credit score, commonly known as a FICO score, but it has some significant differences. Whereas your FICO scores all run from 300 to 900, your company's Paydex score runs from 0 to 100. If your Paydex score is 80, you can pretty much qualify for any line of credit out there. Of course, when you start out, you won't have an 80 Paydex, you'll have a 0 Paydex. If you go to a bank with a 0 Paydex and ask for a line of credit, the bank will look at your business like it's an 18-year-old trying to finance their first car. They'll ask you to co-sign with your business. This ties your personal credit in. The correct way to build corporate credit is to start by establishing small lines of credit with businesses like Staples, Sam's Club, Radio Shack, and so on. These companies will all issue minimal lines of credit without requiring you to use your Social Security number. Once you have a few trade lines, you can qualify for progressively larger lines of credit. Now there's another difference between corporate credit and personal credit. With personal credit, once it's been damaged, it may be extremely inconvenient, but it can be rebuilt. With corporate credit, once it's been damaged, your company is blacklisted by Dun & Bradstreet and you can never rebuild it. From there, the only way to build corporate credit again is to tear your company down and start over. It takes time, but within a year, it can make the difference between your business's future and insolvency. One final note. If an LLC or corporation is set up in a virtual office, it would not be advisable to build corporate credit on that LLC. One of the details that DNB monitors is the business address. Essentially, if any other businesses at that address ruin their corporate credit, it destroys yours as well. DNB considers all businesses at a single address to be a single business. Since the majority of your clients will want the protection, privacy, anonymity, and low taxes of Nevada or Wyoming, this may seem like a drawback. However, in another chapter we will discuss how to get around this issue. Corporate credit enables you to build a business empire as vast as you are willing to grasp without using your own money. And as they say, the rich never use their own money.